around the supply and demand strategy. And then we're going to spend the majority of our time on the live markets, setting up, reviewing, analyzing markets, and just finding some low risk, high reward, and high probability opportunities. Remember a couple things. When we are talking about the strategy, applying the strategy, the rules, right? The rules apply equally to any market or asset class: stocks, futures, forex, options, right? Bonds, real estate, cryptocurrency, doesn't matter. And of course, any financial purpose, right? So day trading, swing trading, longer term investing, you name it, we apply the rules equally. And when it comes down to rules, it's important that you focus at the end of the day on that your rules are in line with how you make money buying and selling anything. So let's get into that. Obviously, in these sessions, I go over as much as I can, but we do have members that are in our sessions every morning, and so we obviously can't go over every detail in these sessions. So if you want more around the strategy and all that, you can always attend one of these financial strategy workshops. They are free, so they're there for you if you want. Let's keep going. So we've looked at our location map before. Remember, this is not about 4 steps for this and 6 steps for that and 8 rules for this. It's about 2 rules, and it's all around structure and location. When quantifying supply and demand in any market, in any time frame, it's about identifying the price levels where supply and demand are out of balance in a big way. Most people don't realize this, but when you think of supply and demand is everywhere. Every time you have a trade or transaction in the market, it's because you have a willing buyer and a willing seller at a price, right? Supply and demand is responsible for every single trade that takes place, and you have supply and demand imbalances all over the place, big and small, right? Every 1 pip move in a forex market, every 1 tick move in a futures market, every 1 penny move in a stock, for example, those are all because of a supply-demand imbalance. All right? Maybe the euro goes up, 5 pips, or Amazon drops 10 cents. It's because of a supply-demand imbalance. Now, that's not a supply-demand imbalance we care about or want to focus on when it comes to looking for the next turning point in a market. That's not a level that we'd want to risk money at, right? What we want to find, and what the whole strategy is based on, what I talk about here every month for years, is identifying the price points where you have a significant supply-demand imbalance. If you're looking at the screen, we want to see a supply-demand imbalance that looks like this. We color code those levels yellow, right? Or like this on the bottom at demand, right? We color code those levels. That's where probability of price turning and the profit zones associated with that level are significant, down at demand, okay? In the middle, which we call the novice space, you have tons of supply and demand, but it's not that out of balance. You can pretty much buy as much as you want, buy and sell as much as you want in the middle, right? As an individual, no problem. Okay, because supply and demand is not that out of balance. This is where, I would say over 90%, well over 90% of the actual trading activity takes place somewhere in the novice space. Does everybody understand that? Easily over 90% of trading activity takes place in the novice space. Someone answer this for me. What percentage of traders, active traders, lose money in the markets? What percentage of traders? Now, nobody knows exactly what that number is, but what would you say? It's pretty common knowledge out there. Yeah, probably about 95%, right? 95% of people. And where are most people entering and exiting positions? Right here in the novice space. Start to connect the dots. Don't do what that group is doing. Focus on what the but the 5% or 10% of people in groups that know what they're doing do, right? Now, I had an advantage in the beginning when I started my career because I started on the professional side of the business at the Chicago Mercantile Exchange, right? Working on a trade desk. That's where I started. So my job was in the beginning was to facilitate the right thing to do, right? Which is buying at demand, selling at supply for the most part. There were always some orders that were in the novice space, but not many on the professional side. All right, but all that matters is what in the world does this look like on a price chart? I think you get the concept. The middle is our no trade zone, but levels that are near, in the novice space, but near supply or demand, and not in the middle, those are gray supply demand zones when you see the charts. We'll get to the charts in a minute. Let's do a quick review. So I know many of you are, look at the markets and are active in the market. So let's do a quick review of last week. You can see how we operated. And I'll share some screenshots of the live morning sessions. Okay. So here's one from last week, kind of kicked off the week. We noticed that the global stock markets, you can see this 60-minute chart here of the S&P, were very far from our key fresh demand zones. Right? We started the week pretty far from demand. What happened a couple days later, price declined through this area. We did have some supply in the Russell, so there were some stock markets that opened up last week at or near supply. But anyway, over the next couple days, price fell. The S&P fell about 100 points right into our demand zone. Why? Because there was not much to stop it. There wasn't a significant enough supply-demand imbalance on the demand side to stop this from happening, right? All of this, right? None of this in here represents a significant supply-demand imbalance. So for the first, couple days of last week, price just went right through this novice space down to our demand zone. So the S&P fell 100 points, then rallied about 60 points, and on the way up, it ran into, right, this is a little bit later in the week, ran into ran into a supply zone in the S&P. This is not the S&P. What I wanted to show you, though, these screenshots are reversed, but look at the date, okay? Here's Monday. The markets were up far from demand, but as price fell into demand, the main point I want to make, sorry about that, as price came into demand in the S&P, the 10-year note and other bond markets, the 30-year also came up into supply. And as the 10-year note came up into supply, an inverse market to the stock market, okay, as the 10-year came into supply and turned, the S&P came down into demand and turned. So what we can do is, as long as we focus on what's real, not what we feel, which means focusing on pure supply and demand, structure, and location being more important than structure, we can now take this two-step, two-rule concept, right, based on pure supply and demand, and apply it to all major markets, stocks, futures, forex, options, bonds, whatever. And when we start to look at all those markets like this, we can see objectively when the odds are stacked in our favor that price is going to turn and move in the direction we think it is, or not. Right? Does that make sense? Now, one of the big challenges people have is they have too many faulty rules, too many things going on in their head, too many versions of strategy. What's probably the most popular strategy out there? What's probably the most common strategy of the 95% of people that tend to lose money? What do most of those people do? Someone tell me. The classic support and resistance is one, yeah, which is a very faulty school of thought. Yeah, they buy when prices are rallying. What's the word for that? Begins with a T. What's the most common thing, popular thing that any trader and I guess investor uses out there? Yes, trend, right? Most people follow the trend, wait for the trend. But if you look at the charts, all right, we don't focus on trend. We don't think about trend. Trend is a very novice term in the world of professional trading and investing. Why? because it completely goes against how you make money buying and selling anything. If you look at this S&P, at the time we bought, what was the trend? Right? The trend was down. Right? According to all the trading books and trading rules out there, you're not supposed to think about buying when the trend is down. Yet, if you're buying at wholesale prices and selling at retail prices in any market, price has to fall to wholesale prices or demand. It has to rally to retail prices or supply. Does that make sense? And of course, the classic conventional term support and resistance, we've never focused on that because it's that stuff is very faulty. What's one of the big, there's a few reasons why you don't see people making consistent low risk income with things like support and resistance. Trend is obvious. You're just buying so late, high risk, low reward, low probability. But why doesn't classic support and resistance work for people? What's the reason? There's a bunch of them, but I can give you one of them. How many times does price have to touch a price point for you to be able to draw a support or resistance line when it comes to conventional technical analysis? How many times does price have to, for example, come down? And how many points do you need to draw a line? That's the real question. I asked it the wrong way. Yeah, at least 2, right? Some people say 3, but at least 2, for example, for support, right? Price has to come down at least twice, and then you draw a line across that those 2 points. And a lot of people wait for a third time, and then they'll extend the line to the right, and they'll call that support, right? And what are you supposed to do when price comes back to that support line? What action are you supposed to take? All right, and in like every trading book out there, pretty much, we're supposed to buy, right? You buy at support. What's the problem with that? Why doesn't it work for most people? Well, again, focus on what's real. Now, just because everyone says to do that doesn't mean it works. There's a reason why 95% of people lose money. Someone answer this. What is happening every time price comes back to that price point, right? The requirements, those pivot lows, for example, that you have to have 2 or 3 to draw a support line. What's actually happening every time price comes back to create that support, to create that? Yes, the buy orders that are down there get filled. Okay, so by the time you have 2 or 3 points down there for pivot lows to now you can draw that line and then buy the next time price comes back to that level, there's very little demand left because those prior pullbacks that allow you to draw your support line are actually, those are sellers filling, those are trades happening, filling the buy orders down there. The demand is getting filled, therefore reducing the probability of price turning higher. Make sense? It's a very flawed school of thought, all that stuff. And the reason why I never got kind of trapped into that is because I didn't learn that stuff first. What I learned was the right way to do this on the trading floor. Does that make sense? I didn't even know about technical analysis in the beginning. Anyway, I think you get the point with all this, so let's move forward. Let's dive into the live charts. So we can go over just about any market you want to take a look at. Why don't we start with the Forex markets? We can jump in and let's go over some. Okay. Let's start with the dollar. Let's take a look at the dollar. So the dollar. Let's go to the larger time frames and look at the really fresh levels. Okay, that's too big. Hold on. So the dollar, the last few days have just been bouncing off this kind of larger time frame demand here. But notice when you look at this area and look to the left, a lot of trading activity here. So while we did get a bounce higher into this ugly area of supply, we're now back into this area. But when you really look at that, that's down here in the novice space. The fresh level that's down into demand, if you want to keep the probability very high, let me scrunch up the chart a little bit, you can see those levels are a little bit lower. We're looking at 91, about 91.70, and then another level sitting just below that. Everybody see that? They're pretty clear? Okay. So we want to get away from all this stuff. And of course, the fresh supply is higher. So nothing that great in here. Having said that, let's go through a mix of Forex futures markets and spot Forex markets. Why don't we start with the Aussie dollar? Let's go to the 4-hour chart. Actually, we don't need to start with the 4-hour. Oh yeah, let's do that. Now, just to get a kind of big picture lay of the land here, right? You can see we're not near a key larger time frame supply or demand level, right? We're kind of sort of in the middle. So having said that, we can now go down to smaller time frames like the 60-minute chart, and you'll see sitting below current price. Let me scroll back so you can see this. We have two levels sitting on top of each other. This was a yellow demand zone, but since it met entry and is on its way, or was on its way, it already met its profit target. That now becomes a green box. But the fact that price, only went about halfway in here, we would utilize both of these levels again. So if we do make a new low in the Aussie dollar futures, we would expect price to turn higher. Now, of course, with any of these, you're going to want to watch, the dollar, right? Mostly as an inverse market, not for all these, but mostly for most of them. Significant or fresh supply is quite a bit higher in the Aussie. You can see it there, but we don't need to spend time on that because we're so far from it. Let's move over to the euro. We'll go over 2 or 3 Forex futures markets, and then we'll move over to the spot market. We'll mix it up. So the euro has some, let's go to the 30-minute chart here. And I think above you'll see that, the key supply level we have, up here around 119.50. You can see what we're coming into now. There's some little stuff in here. I'll show you on a 5-minute chart in a minute, but nothing great or significant. But we do have some likely supply up there around 119.50. So that's the euro's got to move quite a ways to get there. Okay. Going to not the 4-hour. Let's go down to the smaller time frame. We do have a 5-minute demand zone that's much lower. Well, I say much lower, 117.55. That's sitting down there. Let's take a look at this supply zone up here, though. Oh, we've already been there. Wanted to see if that was fresh or not. So there we have 2 supply zones sitting on top of each other. And let's just double check. Yes, we've been there once already. But we had price spent very little time there, significant drop. So likely to turn lower again. And again, that's 2 levels on top of each other. This one's going to need, any of these type levels are going to need the dollar's help. So make sure you take a look at the dollar also. Not a big fan of short-term day trading the Forex markets. Anyway, there you go. We're going to slow down on some of these other markets, and we certainly don't have to stick to just Forex markets. We've got I've got a whole list of markets to take a look at. Why don't we look at the British pound? We'll start with let's go over here. So you see how this demand zone is sitting below all of this, right? Remember, when we go to our screenshot here, price right now is almost in the middle. It's right in our no trade zone. Okay, we need to get below all of this trading activity, all of this actual volume. We need to get below that, which is all of this, and try to get down to this 127.84 area. Little pocket of gray box demand down there. Okay. we can go to a larger time frame here. Let's go to the 4-hour. And while price has already turned at this supply zone, these are all levels that we give our members in our live sessions. There is a fresh yellow box supply zone, 131.35. So that's sitting just above. Price can easily get out to a lot of these levels that we're looking at by the time we meet again. It seems like we meet about every, 2 weeks, something like that. Okay. So there's BP going down to the dollar Canadian. Let's switch over to the spot market. We'll run through, 3 or 4 more FX markets, and then we'll get on to some other markets. And again, I can look at any market you want me to, so just type a symbol in the chat. Not a problem. So let's go to our wrong time frame here, sorry. Let's go to our, that's not right. Yeah, let's go to our 4-hour chart. There it is. So after declining from our 4-hour supply zone, we're back into this gray box demand zone. Be nicer to see price for the second time. So this is not a high probability level. In fact, it probably shouldn't even be in here as a level anymore. But we would expect prices if this market, the dollar CAD, can make a new low, something around 130, in the mid to low 90s. That's where we'd expect a higher probability turn to the upside. Let's go to the dollar yen, and I'm not going to spend much time here, but let's stick with the larger time frames. So, this is a level that we're likely to be able to use and play off of for the next few weeks, possibly. Just above, right around 107, up to 107.80. This is maybe not the next few weeks. I just realized this is location-wise, this is not a great level. The reason why it's a white box is because it's already had a pullback. So often a yellow box supplier demand zone or a gray box supplier demand zone will become white, and that's after the first time price comes back to that level. Now notice price just touched the level, so we have some 2 times after that. So we have some secondary evidence supply exceeds demand here. We now have some nice novice space sitting below this, so perhaps a new high into this area, into this supply zone, and we'll see the dollar yen drop down to the low 104 area, if not lower. The only downside or negative to this level, you don't want to see all this trading activity to the left, whether it's a daily or weekly chart or a little 5-minute chart. You just don't want to see that. Location-wise, it's not great. All right, let's back out to the, that's the daily. Let's go over here. Actually, I believe this is the same level. Aha. All right, there's the other daily levels, but anyway, same scenario there. Let's go over to the Swiss. We look at the spot market. We're going to look at 2 time frames here. So after turning lower at our 2 supply zones that were sitting on top of each other, let's go to the 30-minute chart. We're going to look below all this stuff because we might have some demand if we scroll back. There it is. Below all of this trading activity, you can see here, even if you look left, this market might find some demand at about the 90.38 area. Again, some dollar help will certainly help this. Right? We can use some dollar help with this one, but nevertheless, 90.38 is where that demand comes in, and that's a very tight level, right? Down to about 90. Let's call it 28. Of course, with all these, we haven't gone over this in a while, but how we enter positions and where we put our stops is very important and very rule-based. Right? We typically enter our positions just before the level. The reason being is there's typically so much competition to buy or sell at these levels. We want to get in a little bit before the level. And then our stop, protective sell stop, to manage the risk is always on the other side of that level, right? And whatever the distance is from entry to protective stop, right, that position size determines our actual risk, how much how much actual money we have at risk. And with that, always make sure of two things: that you completely understand the risk you're taking on, and that you're okay with the risk you're taking on. Most important thing in market speculating. All right, I've got some more FX markets here, but I see some of you want some other markets that are not FX, and that's fine. No problem. We can go to gold. Got some nice opportunities. Gold's been a fantastic market. If you're focused on supply and demand, gold has been outstanding. We'll go right to our 60-minute chart here. Let me go over here. Let's go to gold. And there we go. So when we look at our 60-minute chart, we may have gone over this level last time. I'm not sure. The 1937. Anyway, after falling from our 1937 supply, you can see the price is kind of right in the middle, 1904. Watch for some potential demand around 1874. That's 1874. Oh, you got that, Jess? Okay, great. Great. Yeah, there's been a lot of levels that have hit and come up in gold. Now for fresh levels, we can go, well, this is a fresh level, but a higher probability level. There's a gray box level because it's inside of all this. Here's the yellow demand zone, which is typically higher probability. But for that, you'd have to wait till about 1842. 1842, and that's a little bit lower. Okay. We've got our some supply zones much higher. I think there's one more time frame we can look at here. Yeah, you're probably talking about that demand zone, is my guess. But again, now remember, your competition to sell at our supply, competition to buy at our demand, that's what pushes or forces price back to the middle. All that competition eliminates itself, which ends up forcing price back to the middle. And by getting in at these levels, that's how you're in and playing the trend the right way from the beginning. Does that make sense? Okay. All right. So we have our near-term levels. We have our more distant, fresh levels in gold, and there you go. Yes, we can look at Amazon, no problem. So Amazon, I believe we need to look at the 30-minute chart there, if my memory is right, but let's take a look. Let's go to 30-minute. Yes. So we have a little demand zone sitting down here, 3162. Price never got there. And if if Amazon gets down to that level and you're thinking of buying it, if it were me, I would definitely also be looking at the NASDAQ and some of the inverse markets we talk about sometimes. I can't go too deep into those in these sessions, but I would watch for those. Yeah, and from there, let's go to the NASDAQ. See, Cameron wants to look at the NASDAQ, and it just makes sense after Amazon. So let's go there. Amazon has some great levels we can look at. I'm sorry, NASDAQ. Okay, so when you're looking above and below, so we had a session this morning with members. And for the NASDAQ, we're really looking at this chart. I think it's this one, actually. So the NASDAQ really has, now don't look at that area as one giant, well, it is one giant area, but there are like three three levels inside that, three demand zones inside that. They're all gray box demand zones, which means you're not like high probability, but you have two or three on top of each other, so that's a good thing. If the NASDAQ makes a new low, comes down and makes a new low into this area, it hit it yesterday, we would expect prices to, turn higher. Now, we'd expect that not just because of the NASDAQ. There's other markets that would help that happen. If you do move higher, first or after that, there's an ugly gray box supply zone sitting up here. This is not one that I would necessarily take for a short entry. Shorting the stock market or any of the global stock markets, either through ETF, stocks, futures, what have you, shorting the NASDAQ at especially gray supply zones is not ideal. They're great for profit targets and things like that. But anyway, there it is. And when you look at the S&P, the Dow, any of those, they all have that level up here. Watch, if I go to the S&P, you'll see the same level sitting up there. There it is. Okay. And then on the downside for the S&P, we would look again at that same 4-hour type area. See that? And then there is a little kind of gray demand zone sitting, I believe it's right over here. Yeah, a little bit lower, 33.82 and change. All right. Does that make sense? And again, there are, remember we were looking at the bonds earlier? So bonds are one of the three kind of four inverse markets we look at with stocks or equities. And we've been very bearish bonds the last I don't know, we've been the last few days, right? Because you'll see here some of these. We've had some supply zones pop up that have worked out really well. Now, when you look at the 10-year, you really don't have significant demand until quite a bit lower. And we have possibly some new supply zones that are developing again. However, the 10 years down into this area again, that's not a big deal. But let's go to the 30-year. You'll see out of all the bond markets, this is the only one that has a demand zone that's kind of close. And let's see, I don't think we're there yet. Now, we look at the 4-hour, you can see sitting just below the lows is a fresh demand zone. Other than that, the bond markets don't have a ton of demand in this area. But if the bonds do tend to start to move higher, you can see stocks push a little bit lower. But again, in the stock market in the near term, it's really those kind of larger time frame demand zones that are responsible for yesterday's low in the stock market, and we'd expect that price to turn again there. And then on the upside, it's all those kind of 30-minute levels that are sitting in there. Okay. And then stocks, we'd want to any stocks you're thinking of buying or selling, you'd want to time those entries with the market as well. It's one of the things I was going over this morning in the morning session with our members is, we had a bunch of stocks that came into levels at the same time as the broad market, and that'll, that's the case most of the time. Yeah, the DAX has been a key market for us this week. It's the market that we use that kind of tipped us off to we may have a big drop yesterday. In yesterday's morning session, they're all recorded. What we were saying was, focus on the DAX because right now it's kind of the weakest of the major global stock markets. What we're noticing is, like when you look back here, right up in here, the DAX was sitting below this supply, couldn't even get through this, and when this held, there was not much for the DAX to not move down here, and it's still only in the middle. So that helped other markets that had supply zones. For example, if you look at the Russell, right, another one that I think we've gone over this supply zone in here. We've just hit it so many times, but here's our 4-hour supply, right? So we've had this for a while in the Russell. But again, that's just brought price down a little bit. This is so we just looked at the DAX, which is one of the weaker global stock markets, and the Russell of late is one of the one of the strongest. Okay. Other markets you want to look at. Again, we can apply this to any market, any time frame, doesn't matter. I've got a whole list here I can keep going through, but if you want to take a look at some. Yeah, oil, we can take a look at oil. Oil hasn't really moved much the last couple days, but we can certainly take a look at it. All right, so when we look at oil, you know, we've hit some near-term levels. So, for example, you know, we've been, you know, any of our members who want to, they've been shorting off this daily supply here. But the fresh levels, if you're looking for fresh ones, where's the next kind of opportunity? When we look at the scrunch up the 4-hour, you'll see sitting well below. Now, you might say, well, wait a second, that's crazy. You know, we're looking at 28.40. Yeah, look at all this trading activity here. All of this novice space, right? Remember, we caught this initial drop. Remember that? We caught it from the supply zone that was right in here on the 60-minute. Okay, so you know, and that went fine. But why throw away hard-earned money in the novice space? Again, 95% of market participants, no matter what they trade, lose money. Price spends 95% of its time in the novice space. Connect the dots. Have the patience to wait for prices to get out to our next set of levels. And, you know, the next set of fresh supply zones, 45.25, it's not that far away. So for oil, we just, you know, we'll come back to it when prices get closer to an area. You know, if you're buying and selling in here, this is not, right? You see how what looks like a perfect supply zone here? Structure-wise, it's great, but see how it doesn't work? See that? There's another one. Let's find maybe, let's see, right? There's a little demand zone. See how it doesn't work? It's in the novice space. So initially, for the ones I just showed you, those 2-3 levels that didn't, you know, that don't work, those are not levels that we would call supply and demand, right? They don't qualify. But remember, price moves out of those areas because of a supply-demand imbalance. Let me go back to it. This is a big point. Like this right here, like at the time, back here, price absolutely dropped because the supply exceeded demand here. No question about it, for sure. However, that doesn't mean that was a big enough imbalance, right, to cause price to turn again here. Does everybody see the difference? Supply and demand's out of balance here, but it's not a significant imbalance. That's why we don't touch it. It's in here. Okay? All right, let's come down to the Dow, no problem. So after turning lower from our 4-hour supply zone up here, you can see where prices are at. We're down in this area again for, we've been down here before, just like we've been up to this supply before, so we would not use that one again. Let's now go to the 60-minute chart, right? Is that where we're going to go? Yeah. Not the 60-minute, I'm sorry, the 30-minute. There it is. So like I just showed you, again, a gray supply zone. Why is it gray? If I scrunch this up, you'll see it's right in the middle of this, right? If we're not in the middle of this, it would not be gray, it'd be yellow. Gray just means it's lower probability, not a huge supply-demand imbalance. So the probability of price turning is lower. Therefore, if you're going to take advantage of an opportunity like this, you may want to consider reducing your position size, reducing your risk. Anyway, there's that one. And then we can also look to the 15-minute chart. This is from this morning. This one already hit. Never mind. So that was another one we were going over this morning. That one already hit. Forget that one. Okay. And then on the demand side, just significant demand in these, a lot of these stock markets is significantly lower. Well done, Jess. Good job on that one. All right. Good stuff. All right. So again, if you want, hopefully that was helpful. You can always reach out if you have any questions. There's a link in the chat. If you, if you want more information, want to take this deeper, we always take it deeper and deal with some. If you're having some, if you're having any challenges achieving, or executing or with strategy or anything like that, those are some of the things that are dealt with in this workshop. You can always show up if you want. Some of these do fill up, but you'll find space if you like. Anyway, good question there in the chat on U.S. session only. No, so we want to look at all available evidence. So we don't just look at the U.S. session. Okay. Typically, for the stock market, for example, typically those are going to be, the day session levels are going to produce typically your best levels, but we always look at the overnight action to, at a minimum, to see if those day session levels are fresh. In the Forex markets, when was that level created? Was it created during kind of high activity time, or was it, kind of after the U.S. is kind of fading off the markets but before Asia, things to think about there. Okay, struggling with location, I see. Yeah, so today and last session we focused on location, so hopefully that answered some questions. And on that note, see, there's a link in the chat if you want to reach out or come to one of the events. I just put it up in the chat there if you like. All right, great. Have a great rest of the week, and we'll see you soon.